Great. So we are live for the London session stream inside the community. GM to everyone watching, GN or wherever the hell it is in the world you are. So yeah, the analysis that I provided on Saturday was on a reversal confirmation in the form of a unicorn. I did actually exit my entire Bitcoin position on the 4-hour model. Pretty ballsy stuff. This was on the Friday. Basically just sub 120k. And yeah, so my stance hasn't changed. Just following on from the video that I did last week, I spoke about how, once we kind of swept these highs, I was anticipating a reversal simply because we didn't displace above this previous monthly high. We're at the 2 to 2.5 standard deviation zone. And with that sharp rejection, yeah, I was expecting this reversal to form and for these lows to be the target. And that's what I'm targeting now. So simply because, well, we've taken out the previous month high. You could also look at this as a previous week. This is a previous week. And this is all low resistance liquidity. So you can see this inefficiency has failed, right? Because this is the first side of the curve of the market maker model. It's the market maker sell model, right? So the two things I look for, well, the three things is first the original consolidation, which we got here, right? Price is just chilling. And at the original consolidation, I wanted to see ideally equal, if not relative equal lows, which we've got there. Right, and that's the high time frame PDA, that's the target PDA. So we delivered from a previous monthly low. I expect it to deliver to another high time frame liquidity pool, which is in this form here, a previous weekly low. And if this thing hangs around for long enough and maybe gets a retrace to this level before dropping, well, it's unlikely that it's going to last until September for this to form as the previous monthly low, but you never know. This could move up into this fair value gap. There's a lot of liquidity at 120k. And then we could chill around here before dropping. If that's the case, you could probably see Ethereum making this kind of move, which we'll get into next. But we'll go look at the low time frames to see what we got there. But as it stands, the delivery path I'm expecting is from this previous monthly high to this previous weekly low, which is the original consolidation of this first side of the curve, where the market makers were accumulating short positions, right? They're accumulating the cells and now they're distributing it on this side of the curve. So yeah, the first thing I look for is original consolidation with at least relatively equal lows. Then I look for other engineered liquidity, and we've got look at this. Look at these relatively equal lows here, over here, here. So this is all that low resistance liquidity, and that's what the kind of moves you get, right? So it just falls. That's cascading sell-offs, right? So the second thing is inefficiencies, which we've got over here. On the far charts, that's probably a couple more over there. And then you can really see that trend line liquidity, which is another reason why I spoke about with that sell-off that we had, and we had that there's a slight inversion in there as this as well as that, and this over here. So once we close there, that's the breaker block that I used. That's why I sold that. Looking at all this trend line liquidity, the original consolidation, all those fair value gaps. So for me, with the interbank price delivery algorithm, or whatever you want to call it, I've learned to understand the market moves for one or two, if not both reasons, and that's seeking liquidity pools and rebalancing inefficiencies. And we have both of that on the market maker model on this side of the curve. And so, yeah, I exited that position. Now, am I bearish thinking this is the macro top? Well, no. I've been in Bitcoin now since the bottoms at around 16k, whatever it is. And so exiting this position around here at 120k is a pretty good return. And the thing is, do I think this is the top for Bitcoin? Not necessarily. I've spoken about how I use the time-based model with Bitcoin, and that I expect the top to be in here in sometime in October, November, December. And so could Bitcoin pump from here? Yeah, it could. Maybe it hits 250k and it's doubled. Okay, great. If Bitcoin had to double in that time, what do you think Ethereum is going to do? What do you think Solana is going to do? What do you think Link's going to do? So that's what I've done now. I've taken a big portion. I'm basically predominantly in stables, and I've shifted, some of those stables into. I've got my ETH position still from much lower. I've now bought a bit of Solana, a bit of Link as well, but there's a few percentage. So I'm taking higher risk with a smaller amount of nominal value, right? So I basically locked in a lot of my profits, and so if we do get a massive sell off on Bitcoin, just like directly down into the Yeti Open, I'm gonna look for longs for that, and I'll probably accumulate Bitcoin again under 100k, looking for a bounce. But I don't expect that to happen, or maybe it will. I'm not sure, but I'm not. That's not what I'm concerned with right now. I'm concerned with one of two things. I'm expecting these relative equal lows to get targeted, and so once price gets that point, I'm going to start reevaluating where the market's at. Now the thing is, I'll get to the second thing in a moment, but when you're looking at Nasdaq, it's this fair value gap that I'm looking for price to move into. And in fact, let me actually bring out my analysis here. But so yeah, that's kind of what I'm targeting on Nasdaq. And so when you look into the lower time frame, right, and you look at another potential market maker model here, that low is the same low that we were discussing on Bitcoin, I think. Let me double check that. Yeah, it is too. So Bitcoin has sold off, faster, which it would, right? It's a lower liquidity asset compared to Nasdaq, of course. Now all these lows do look sus. I'll give you that. If that's what you're thinking, I'll give you that. But at the same time, you look at its correlated pair, it has already swept that. So the only support I actually see for the indices is on ES in the form of this fair value gap, which is on the daily. So it could very well come and sweep this high, right? And invalidates basically the idea that I have, especially on ES. And it's kind of, the more that we kind of sit here, look, we haven't inverted this fair value gap on the daily. Just clean this up quick. And these highs have been swept. So this is a weaker asset, which is what you'd expect at a local top at the least. So yeah, for me right now, I'm just kind of sitting and waiting, because I would like to get back in long in the markets from when Nasdaq hits these lows, and I don't know when that's going to happen. But you could get these massive sell-offs. I mean, that's how these indices, especially Nasdaq, you could get a huge sell-off, and we could reach this by the end of this week, if not next week, something like that, right? So it's very possible. But yeah, we will see what happens, right? Because for me, these lows from the start of August on Nasdaq, on Bitcoin, etc., that's where I'm going to start paying attention again. And so, we'll see what happens, because what could potentially happen, the second thing I'm looking for and what I'm paying attention to, is with Bitcoin over here, right? We've taken out some of the sell side liquidity, and we could get a bounce from this level to come sweep out these lows, these highs. Maybe come up and sweep up that liquidity 120k before a bigger drop. If that's the case, right, I'd much prefer to see Bitcoin come and take out this low now, and then look to trade, to these highs, having left all this liquidity untapped, right? So what I wouldn't want to see necessarily is if Bitcoin comes into invert this, so then tap into this liquidity, because if it fails here, there's going to be a much bigger sell-off. Because now you've swept all this liquidity, it's been, there's little reason for this to come back up, because this high is just a single swing high, right? But if it had come up and left like a relative equal high here, and then it had been dropping, and it even came up to this point and then dropped low, I'd be like much more comfortable knowing that I've got a very clear drawn liquidity. So as always, it's a game of chess. So I'd prefer to see these highs left untapped, untouched, and for the price just to drop and take out these lows. If this gets taken out, and this is what I discussed last week, that means Ethereum is going to take out this low, but this will be creating a higher low relative to Bitcoin. That Bitcoin will be taking out these lows relative to its correlated pair. And that's what we want to see. We want to see the strength. And this is what I spoke about in last week's thing. When Bitcoin takes out this low, that bounce, even if it's to this level, is going to provide the next leg for Ethereum and alts. The thing is, though, is that you then want to see Ethereum blast through this and displace, because if we come and take this out and we sweep the highs and Bitcoin gets rejected here, I'm not gonna be holding Ethereum. I'm not gonna be holding alts, because it suggests to me that there's going to be a bigger pullback. So, but that's neither here nor there, right? We'll wait. So there's probably going to be such a big short squeeze here. So we'll wait to see. That's nothing we need to think about right now. But the fact that, and this is what I spoke about last week, is that I want to see a pullback without taking out the all-time high, because then we've got a relatively equal all-time highs. And then we get a pullback, and look at this last liquidity. So I want to see this drop into the zone here. This is also 2 to 2.5 standard deviation zone. This is the weekly fair value gap. You're also retesting that previous weekly high. And yeah, I'd like to see manipulation at this low. And the fact that this is the weekly open over here. I would love to see, all the sell side liquidity get tapped beneath the weekly open, and then a reversal confirmation model to get back in. Well, not back in, I'm still in my ETH position, but I will trade this. And I'll also then look to trade Solana, Link, etc., right? Link we'll get to in a moment. That's the special case. So yeah, something we really got to look out for is a big work down here, because you could get a huge cascading sell-off here from longs getting liquidated, and you want to see that getting bought up fast. You want to come back to the next, after that liquidation, you want to see a huge wick. Not just any wick, you want to see a wick with a confirmation model. That then I'm bullish, I'm in, we're riding it. And I don't care what Bitcoin does, right? Bitcoin can come up, with Ethereum pumping, Bitcoin comes and make us a lower high, and Ethereum does its thing, and then the market does whatever. I don't care what happens after that. So that's neither here nor there. So yeah, and this is what I spoke about. That bounce that we get on Bitcoin, that's where you're going to see outperformance from alts, obviously Ethereum first and foremost. And so yeah, we'll see what happens. It's and this is what I was saying last week, is that you really got to have balls at this stage of the markets, and that's why I'm taking bigger risk, but with smaller nominal amounts. I'm not going all in, and I'm more predominant stables, so I can play certain trades. Again, taking higher risk with the smaller nominal amounts. I've had enough exposures to this market for long enough. I think we're due for a bigger sell-off, but I'm still waiting for that euphoria. Don't forget, that's my macro liquidity thesis, is that we're now entering into the liquidity, the euphoria phase of the liquidity cycle, where rate cuts happen, right? And that's obviously the market now is anticipating that. That's front running those rate cuts, which is why Ethereum's been pumping since the bottom of April. And so, then we look at other higher risk plays, such as Link, and you could argue that it's a lower risk play, given its fundamentals, and I do agree. So yeah, we've been talking about this for weeks now. At this point here, we are talking about, I want to see a weekly close above this level, and then I look for a retest, and we got exactly that. And that's where I entered long into Link, added to my position here, looking to get a trade into this weekly fair value gap, because at the time, this weekly candle hadn't inverted this. And with Bitcoin starting off from that, I actually exited my position in a small profit, which was, I was anticipating this low to get taken out. But the moment we closed above this level over here, that was an inversion, and that's when I'd exited my trade anyway. So yeah, it will probably drop lower, potentially. I'm not phased. And the reason is because my second reason to enter into this market, and this is the final place that I'll enter into Link, is the inversion of this fair value gap, which is what I refer to as the master fair value gap on a market maker model. Whatever the term is, I don't care. The fact is, typically the first fair value gap on the first side, the first curve of the market maker model, once that gets inverted, there's an exceptionally high probability that these highs from the original consolidation are going to get taken out. I also like the fact that this high wasn't taken out. So this is where I'm going to be entering into this trade. If it drops lower, I'm okay with that. It still doesn't invalidate this market maker model. In addition to the fact that I'm exceptionally bullish on Link as with its fundamentals, I've also got the technical support, right? You could call it that. Confluence, rather, with my market maker model. And this, for me, is one of the most... I trade this model so often, and I go into this trade with way more confidence than I do my reversals. I much prefer reversals, but when I'm uncertain, I'm happy to wait. And then once I get this inversion, it's not a great risk to reward, but it's a high probability trade. And in fact, that's exactly the trade I took yesterday on NASDAQ. Let me just point that out quickly. It's worth just having a little look just to make my points. Okay, here we go. So yesterday we came down and made these equal lows, right? This is with a much higher time frame low. It literally made it tapped out and make equal low, but it did take out the London low. And you can see here, this was actually this is a reverse model, low, high, low, low break with a fair value gap. That's a unicorn, right? Because at the 10A open, bam, sweep liquidity, boom. There's your opening bar side liquidity, but I wasn't going to enter here. I really wanted to, but but these high time frame equal lows were sitting around here, and we had already tapped into a 1 hour fair value gap, which is a larger fair value gap, and taken out London's highs. So I wasn't very comfortable taking that position. But the moment we closed above that, I was like, okay, great. I'm interested. But the moment we inverted this, this is that first presented fair value gap on the manipulation leg down for the market maker model. So this is the manipulation leg, which turns into reversal. That's the inversion I would have used as an inversion entry model. But when it comes to continuation for the market maker model, I want to trade the continuation because it's high probability. And look at that. The moment I entered, bam, straight to it. And then it delivered from that 4 hour fair value gap opening bar side, then to the equal lows, which would have been a really nice trade. But this was difficult price action to zip through. Okay, my point is that this is the same model we're looking at here. Right? This is the exact same thing. This market maker model is exactly what you're looking at here. So the fact, once we close above that, I'm expecting a run to these highs. Now, do I think that it's going to do exactly that? I would love that too, but it doesn't have to, right? There's nuance in these markets. That's how they get you, is that when it's the right time, then they'll move it, but they can't hide price action from you. The fact that we've inverted that gives me high probability that we'll take that out. I'm also very happy to be wrong in these positions, and I'm on a spot margin, right? This is not leverage trades. These are spot margin trades. I'm happy to absorb volatility down to the yearly open. And again, with the euphoria phase, I'm not too concerned with what Bitcoin is up to, even if this is a top. I'm just happy to trade the volatility on these high beta plays, especially with Link, which is this incredible project to be invested into. So if I can get these and expands all the way up to like all-time highs, awesome. I don't need that to happen, but you'd expect that kind of price action in the euphoric phase, especially if Bitcoin dominance at the end of this week, in this month, inverts its final supports. We could definitely see this kind of massive move, especially if we get that a huge expansion on Ethereum. But again, that's neither here nor there. I'm just focused on what's in front of me, and that's this market maker model to this level here. Once we trade to that, I take off the thing I add to this, I add over here, and then I will hopefully hold on to this original position up to this high as a runner. Obviously, if this sweeps this and we're getting pullbacks and exits, and just look to re-enter, because this market maker model is complete. Maybe this is one big ass market maker model, perhaps, but this will also depend, if I hold this longer, I want to see displacement over these highs. I want to see Ethereum doing the same thing. Obviously, there's context, right? That matters. All right, so that's basically where I'm at with this market. It is pretty tense times. I'm not gonna lie. It's but yeah, for me right now, I'm just waiting for Ethereum to tap into that weekly Fibonacci gap, which looks like it's going to, right? Um, so we'll see what happens because this is Asia that's dropped off. London's now just going sideways, which means we're probably going to manipulate lower at the start of the pre-market in New York, or perhaps at the open, since there's no real news today. And if we get manipulation and a low time frame formation model down here, right, this is my model, continuation model, right? High time frame continuation model. There's your weekly displacements confirmed with this fair value gap. We've got relative core highs above. We've now had a slow orchestrated move into this weekly fair value gap. That's my high time frame PDA, right? Now I expect the weekly, this previous weekly low plus this weekly fair value gap to then deliver to this previous weekly high plus the all-time high. So that's a really nice, strong delivery path, which I will enter if I get this low time frame confirmation model down here at the New York Open or at some kill zone. And we've got all this nice low resistance liquidity as well, and these fair value gaps. So this is like an A++ model for me. I'm not gonna not enter this. You got to execute the process no matter how you feel, nonetheless. So yeah, and I mean, for people like, oh my god, why don't I take more profits here? I'm worried about if this is the end for Ethereum. The thing that one of the most, the strongest lessons that I've learned, or something that's stuck with me probably the most when it comes to, trading these markets, is inducements. I can't tell you how many times I've seen the market go directly to a high time frame level, stop just below it, and then pull back. And everyone thinks, oh shit, it's over. They panic sell at the bottom when there's manipulation, only for this thing to pump and smash those highs. And the same thing happens, vice versa, right? So you get this high time frame level at the bottom, price stops right at this, and then manipulates higher, then dumps, reverses. I've seen it time and time again, which is why relative equal highs or lows is one of your strongest draws on liquidity. So like I said last week, I want to see these highs untapped. I want to see a pullback before it is, which is going to give me extra confidence with targeting this as a draw liquidity. And now that we've got the first side of the curve formed, I know that the market makers are now accumulating long positions. I want to see manipulation to pair orders down at this sell side liquidity. Also achieve the objective of rebalancing inefficiency, seeking liquidity pools. Then once we get the low time frame confirmation model, if or when we did get that, I'll enter along with the expectation for the second side of the curve for the market makers to distribute those long positions, which they accumulate on the way down, and distribute as the market's going up, right? Because as everyone's buying or the market's buying, who's on the other side? It's the market maker, right? So yeah, that's the analysis for today. That's the only real things I really want to look at. So yeah, it's going to be a really interesting time to see what happens, because if Ethereum pumps, it doesn't displace above this, and we get the Bitcoin start to sell off and it hasn't taken out these lows, etc. Yeah, we'll cross that bridge when we get there. But right now you just got to trade in what's in front of you, and we'll see how that plays out.